let's stick with that breaking news out of Bank of America. The bank CEO, Brian Moynihan, says the bank will defend shareholders by disputing any unjustified demands that it repurchase defective mortgages. For the details on this, let's bring in Julie, Hyman, Dom Chu, and Adam Johnson, who are all tracking these breaking headlines. Guys, where do you want to start?
I mean, here's the thing, Carol. If we take a look at this, we were just talking about it for the past half hour, this notion that you could honestly find some other kind of shoe to drop there. And as we see this story develop, and you saw the charts, guys, the steep drop off at just about that 149 in the afternoon mark, 1349. You saw those headlines hit, and that stock just kind of taking a tumble there. And of course, this is not something that anybody really expected. I mean, we talked about it for a while.
I want to back up a little bit on that one, because I actually talked to Paul Millard over at Freeman Billings Ramsey a little while ago, bank analyst there, and he says this lawsuit was actually telegraphed pretty well. He said people kept calling him over the past couple of days and asking him questions. He, however, we should mention he has a buy on the stock. He doesn't think that this is necessarily as serious as people are talking about. He thinks, you know, do we know that this lawsuit is going to succeed? That's not yet something that we know. He also was questioning what exactly is the New York Fed's role in all of this? Why are they a party to this lawsuit? So that's something that we can sort of dig into as we find out more about this lawsuit.
Well, and Julie, you know, you heard Brian Moynihan talking earlier today with Eric Schatzker here on Bloomberg, and he said the bank is going to defend its shareholders by disputing any unjustified demands that it buy soured mortgages back. So clearly, Bank of America is already on the defensive here.
Well, and it absolutely has to be on the defensive. It absolutely must make that statement. Remember, of course, Bank of America on an operating basis, they had positive earnings of about 27 cents. If you back out the write-down they had to take, they would have lost 75 cents. That write-down was about $10 billion, again, round numbers. So you talk about potentially a $48 billion number, and we don't know how that translates into earnings. But the point is, you're talking about dollars, not cents, potentially. So absolutely, Bank of America has to defend itself vehemently against this. You would expect nothing less of a Brian Moynihan.
Well, Matt, Carol, the issue also is this notion, basically, that you have kind of who's next? You know, what's the next shoe to drop here? We don't know if there are other firms out there besides BofA who could have this kind of exposure.
And is 48 even enough? It could be higher. We don't know what we don't know.
You know, you have to look at the entire pool of mortgages. Again, this is a specific because Countrywide was bought by Bank of America, and these loans are Countrywide loans. So that's the reason why it's kind of coming forward right now. But you don't know, like you mentioned, a lot of other mortgage lenders out there who could be at risk as well right now.
And guys, I have to point this out. How ironic that Angelo Mazzillo, founder of Countrywide, was just several days ago effectively able to settle without the admission of wrongdoing. And now, of course, just literally 48 hours later, it looks like all of a sudden there might be wrongdoing according to some other parties in the government.
Well, we have seen, you know, BNY Mellon last month declining to take back some mortgages in response to a similar bondholder group. That bondholder group has now expanded. The point being that, this is not the first case that we've heard of this. You know, BNY is dealing with it. Other banks may be already dealing with it as well. And B, you have CEOs who were prepared. I mean, Moynihan's interview with Eric Schatzker was this morning before Bloomberg broke this story on Pimco and the Fed. So it's not really a shock to the market, or at least it shouldn't be, should it?
Well, the problem is you can't quantify it. If you don't know what you don't know, your first move is to sell. And, of course, you saw that with the stock. It traded down instantly about another 1.5% as soon as the news came out. Is it a true shock? Well, I guess down only 3.5%. Only 3.5% tells you it's not the wholesale shock it could have been if we were down 10%.
And you guys, that gets to something you talked about before. It just creates another round of uncertainty when it comes to the financials overall. BofA specifically, this is something we talked about with Mark Grant yesterday. You know, when we look at these financials, here's just maybe potentially, as you said at the beginning, maybe another shoe to drop for these names. So we've got to kind of keep a watch. Well, we don't know how big potentially this problem could be.
Well, and that's something that Paul Millard pointed out too. If you're a large institutional investor and you're long the financials, and then you have all of this looming uncertainty, again, even if the outcome turns out positively, can you take that risk?
By the way, guess who's long financials?
Tell us.
BlackRock.
Yeah.
I have a Bloomberg viewer writing in right now and saying, hey, look, BlackRock's the third largest holder of BAC. So you're going to see a lot of these companies sort of at odds with themselves on these kind of suits, aren't you?
Yeah, well, and that's the thing, too. If you just look at the financials in general here, it's also about the entire market because, again, those financial kind of worries were kind of taking down the entire market. The market was kind of down already, and it got exacerbated by this whole situation with these particular headlines. If you see a lot of the move in the last 45 minutes driven almost exclusively by financials in some ways.
And I tell you, what's really going to be key is to see how the government responds over the next 24 to 48 hours, because what you don't want to see is the sort of mandating or bully pulpiting, if you will, that you might have you might use to characterize what happened in the auto industry or during TARP or during healthcare, where effectively government entities are telling private enterprises what they must do or what they should do. Traders are going to be very, very tuned to see how the response is from the government. So if you start hearing that kind of language, it's a concern. As long as you don't, then it's something that gets fought out in court.
All right, guys, you know what? I'd love to just rehash, if anybody's just tuning in at this point, let's rehash. This is a Bloomberg exclusive. Our Jody Shen writing this story, and it has to do with Pimco, Pacific Investment Management. You've also got BlackRock and the Federal Reserve of New York are said to be seeking to force Bank of America to buy back soured mortgages packaged into about $47 billion worth of bonds by its Countrywide Financial unit. Remember, it picked up that unit several years ago. This is, of course, according to people familiar with the matter. So this is what, again, guys, has got that BofA share really moving today.
Yeah, and one more little tidbit. Matt was mentioning that a viewer wrote in to point out that BlackRock is the number 3 shareholder. In the number 5 spot is a well-known gentleman named John Paulson, who owns about 1.7% of Bank of America shares. Just a little.
Well, and the argument, of course, has been that they are so cheap. Dick BofA, Rockdale Securities, a note out just last week saying a lot of these big banks are trading under cash. Now, in his cash estimate, I believe he includes holdings of government securities and agency securities, so it's sort of cash plus. If I'm quoting his note correctly, and by the way, if I'm not, I know he will call me. Yes. But the point is, these banks are trading very cheap, but if there are some mortgages they're going to have to buy back, all of a sudden they're not quite as cheap because that money they thought they had now obviously goes into the pockets of somebody else.
Carol, Matt, also just one thing. This also speaks to the hair trigger that we're talking about here, right? The hair trigger that a lot of investors have right now. If you do see some bad news, the first gut reaction you have, like you said, Adam, is to sell. And that's what we saw with the stock here. Again, these themes are developing a little bit more closely with all these other correlations, these relationships in the marketplace right now. So everything is being so intertwined, you can see why the market may have sold off as aggressively as it did when those headlines broke.
And remember, of course, September, one of the best markets on record, up 8.5%. You know, we were all talking about it at the end of the month. So if you've made a lot of money over the past couple of months, past couple of weeks, and then a headline like this comes out, you say, you know what, I don't need it. Let's just sell some of this and put the profit if it's still there in the pocket.
Well, exactly. But, you know, another point or another case that points to the fact that this has been out there and investors maybe have just chosen to ignore it because they think the stock is so cheap is that Brian Moynihan today said that their costs for buying back mortgages in cases like this have actually fallen in this quarter from last year. And in fact, they're down 30%. So just merely the fact that Pimco and the New York Fed are in this headline is enough to spook this market. It's not that it hasn't been going on.
No, and they might have already reserved for a lot of this. We know that Citigroup in their note, in their call, in their earnings report also said that they have set aside a certain amount of money to kind of buy back mortgages as well. So this is not something new, like you said, Matt. You made a great point there. Not something terribly new here. Just more this notion that if it can happen to one bank, could it happen to others?
And it's the amount as well, as Adam pointed out.
And it doesn't take much to spook this market at this point. Hey, guys, thanks so much.